Hi, Mr. Wilson here again, taking you through part 2 of Dry Cleaning by David, doing the balance adjustments. So in your book, this is page 1991, and let's get straight into it. So wages owing on balance sheet, what you did is you added accrued expenses to that, but we debited wages, so we always do the debit first. So write the debit for wages, that was $560, and the credit, make sure we indent in, and we're going to type accrued expenses. This is a credit because it's a liability. Easy first one up. Rent paid in advance, you wrote that as prepayments, and that's added to the debit side, so we'll debit it. And the figure is all 2,000. Remember that excluded the GST figure. And what are we going to credit? So that's our revenue account. Sorry, our reducing our expense account. Dividends owing. This added accrued income, and according to us, it was $135. Remember to indent, and it's called dividend received. So make sure it's the same narration here as you would have in the trial balance. Right, interest owing on loan. Again, this one's accrued expenses. So we're going to debit the interest owing, or sorry, interest on loan, and the credit, making sure you indent. The interest owing on loan. See, I haven't done that one, so you might have to go back and add this to your trial balance. The figure for that one is 10% of the loan, so that's 56,000 times 10%. So your interest on loan should be 5,600. At the moment, it's only 2,500. So we're going to add 3,100, and you need to add that to your accrued expenses figure. So go back and put that in, and also to your interest on loan. And that's why it's really important to tip them off as you're going through. The next one is bad debts written off. So we're going to debit the bad debts, which is the expense, and GST, and the credit, indenting again, is to account receivable, because we're writing off both the bad debt and the GST on that account. The figure for that is 184. So the whole amount goes to account receivable. Two bad debts, we added 160, and therefore 24 on GST. All right, remember this figure is this divided by 1.15. Adjusting allowance for doubtful debts. So that went up by 20. So we're going to debit doubtful debts, the expense, and its credit. Make sure that you write the full amount. In the exam, the examiner doesn't like you abbreviating. Invoice on hand for electricity. So we're going to debit electricity and GST, and the credit goes to. And that electricity owing was 138. So these journal entries are nice and easy. Again, just make sure you indent that one. Oh, we've got depreciation on vehicles. So debit is to, right, vehicle depreciation. And the figure you worked out for that one was 50 cents a kilometre multiplied by 6,500, so 3250. We've got depreciation on dry cleaning equipment, same thing. The dry cleaning equipment depreciation was 7920. You have to write pretty small on your one, I imagine. And then this is going to be even worse. You should have the font right down to a very small. Accumulated. You might need to write 2 lines for that. Now the next one's quite an interesting one. It's closing the expense account. So what we're going to do is have a look at all the expense accounts. The debit entry actually goes to income summary. We won't know this figure to the end. So all your expense accounts that's in your trial balance, they need to be credited. So we'll start at the top and you'll see advertising, telephone and internet. So why don't you press pause? I'm going to press pause and put the rest of them in, and you can write them in. You can see all the expenses here are going to be credited. So we'll do this part here last. You're going to grab all these figures straight out of your trial balance. So remember, some of them change, some of them won't. And so why don't you put all of these ones in? Again, press pause and come back and fix them all up. All right, so hopefully you've got all of those ones in. Note I didn't split up the insurance into the 2 here. And then lastly, we'll add up all our expenses. So we're debiting the income summary by 194,946 and we're crediting all the expenses. So the expenses basically start next year with a 0 balance. Right, now onto the ledgers. All right, onto the ledgers. I hope you don't mind. I've got a bit of a wider screen on this one. And so what we have to do for ledgers is put the opening balance, balance adjustment, and closing entries. For the fees received, we're going to have the balance to start with. And this is the figure that's actually printed. So 196,400. And just write CR next to that. Just widen that so you can see. Right, so we've got the credit balance in there. And because it's an income account, there's no balance adjustments. You can see that there's no crossing off here. So we just need to close that, and we'll close that to the income summary. It's a credit balance, so we have to debit it and end up with a 0 balance in there. Dry cleaning wages is a bit more complicated. Put the balance in first. And that starts off with 42,500. You can see this figure here. And it's in the debit side. Then what you did is you added something. So dry cleaning wages, we added 560. And that was an accrued expense. And that balance became those 2 added together, which is this figure. You've got dry cleaning wages here. And then because it's an expense, we have to close it off to the income summary. And all of it, so we end with 0. So 3 marks that you're going to get for that when you do that assessment. Accrued income. So accrued income, let's have a look. We've just got one figure there, 135, and that was for dividends owing. And it's 135 in the debit. It had no opening balance because we added it as a new account here. Nice and easy. Shop rent. It did have a balance to start with. We've done it in the balance column only. And shop rent, you'll see, was 28,000 with a debit. and then there was a prepayment there. Was it? Oh, income in advance, was it? Prepayment. So that reduced our shop rent by 2,000, and that's the figure you've got at the end. And then because it's an expense, what do we close it to? It's an easy mark, that one. You've just got to make sure you do it. And make it a zero balance at the end. Prepayment, that was shop rent bit. So we're going to put shop rent. 2,000. And a couple more to do. Bad debts. So bad debts didn't have an opening balance. If it did, we'd write balance in that figure. But in this case, it's just to accounts receivable. And the amount that we added to bad debts was at 160. And it's an expense, so we close it to. And the last one is drawings. Now, drawings has got a balance of here of 22,000. Remember where we close that one to? Good, we close it to capital. So it's got to start off again next year with a zero balance. Done. Right, that's the end of that one. Hopefully you've got it all written down on your sheet. And all ready to do the statement of income statement and the financial position statement. Ka kite.